traders may want to put on their hard hats. That's because US markets picked up where Japan left off, and the global stock market.
New Year raises big questions for major economies around the world. What is the outlook for growth in 2025? With the breaking news, a fresh trade war between the US and China has just kicked off.
25% on Canada and 25% on Mexico, and that'll start.
In a surprising move that has caught the U.S. off guard, Japan, historically one of the largest foreign holders of U.S. Treasury securities, has begun reducing its holdings. This decision comes against the backdrop of heightened tensions in the ongoing trade wars, especially with President Donald Trump's aggressive tariff policies. Under Trump's administration, trade relations with several global powers, including Japan, have become increasingly strained, with tariffs being imposed to protect American industries and rebalance trade imbalances. Over recent months, foreign holdings of U.S. Treasuries have taken a significant dip. Japan, the second-largest foreign holder, has reduced its Treasury holdings by more than $27 billion, from $1.087 trillion in November to just $1.060 trillion by December 2025. This move has sent ripples through the global financial markets, as Japan is seen as a bellwether for investor sentiment towards the U.S. dollar and its future stability. Japanese officials, including Trade Minister Yoji Muto, have indicated that the decision to sell U.S. Treasuries is part of a broader strategy to diversify Japan's foreign exchange reserves and avoid further dependency on the U.S. dollar. The trade tensions, exacerbated by the tariffs, have led Japan to reconsider its long-standing practice of investing heavily in U.S. debt. The U.S. and Japan's relationship has been increasingly dominated by trade disputes since President Trump's tariffs were imposed. These tariffs, designed to protect U.S. industries from cheap foreign goods, especially steel and aluminum, have resulted in significant economic friction with Japan. Japan, heavily reliant on its manufacturing and automobile sectors, has been facing challenges with these tariffs. To offset these pressures, Japanese companies, like Sony and Toyota, have been forced to reconfigure their operations in the U.S. by stockpiling goods and shifting production methods. Japanese companies such as Sony, Honda, and Suntory are not only stockpiling inventory in the U.S., but are also reshaping their strategies in response to the tariff increases. Sony, for instance, has been building up inventory in its gaming and electronics divisions, while Suntory has been actively increasing its tequila exports to the U.S. in anticipation of higher tariffs. Japan's reduction in U.S. Treasury holdings is seen by some analysts as a direct response to the growing concerns over trade imbalances and the impact of tariffs on their export-heavy economy. Another critical factor is the currency issue. While President Trump has often criticized Japan for manipulating its currency to make exports cheaper, Japan maintains that it is not actively devaluing the yen. However, the fluctuations of the yen against the U.S. dollar play a significant role in shaping these economic dynamics. Globally, Japan's decision to scale back U.S. Treasury holdings is sparking fears of further strain on U.S. financial markets. Many economists worry that if Japan and other foreign nations follow suit, it could result in rising U.S. interest rates and potentially a weaker dollar. China, another significant holder of U.S. Treasuries, has similarly begun reducing its holdings in response to the tariffs and the trade war. With both Japan and China shifting away from U.S. assets, the dollar's dominance as the global reserve currency is now being questioned. As Japan moves to diversify away from the U.S. dollar, we could see a shift in the global economic landscape. Experts warn that this could potentially weaken the U.S. dollar, increase inflationary pressures, and reduce foreign investment in U.S. bonds. Japan's efforts to stabilize its economy amidst these trade wars also involve diplomatic maneuvering. Prime Minister Shigeru Ishiba recently signaled that Japan will work closely with the U.S. to negotiate exemptions from tariffs, particularly in sectors like automobiles, which remain at the heart of the trade dispute. Japan's decision to reduce its U.S. Treasury holdings is only the beginning of a larger shift in global financial and trade dynamics. As the trade war between the U.S. and its key allies intensifies, the future of the U.S. dollar, the global economy, and international relations hang in the balance.